The Fed does taper. I think they're going to do the absolute minimum amount that they feel they can realistically get away with. In fact, I don't think the Fed ever really wanted to taper. I think they wanted to talk about it, but they didn't really want to do it. But they've kind of backed themselves into a corner where so many people are expecting a taper that to not taper, they might be too afraid of the message that sends about how weak the U.S. economy really is. So I think to the extent that they bow to that pressure and taper, they're going to try to unwind it, almost like have their cake and eat it too, by trying to reassure the markets that this is all we're getting, that they're not anxious to increase it anytime soon. Maybe they'll back talk about when they're going to raise rates above zero. Maybe they'll change the benchmarks for keeping them at zero. But, ultimately it doesn't matter because I think the next big thing the Fed's going to do is increase QE. They're going to be buying more than $85 billion.
Why increase QE?
Well, because we're going back into recession.
Where? Give me the hard facts.
Well, the phony recovery that the Fed managed to engineer is strictly a function of the QE. And in order to maintain it, larger and larger doses are required. Just like, a drug addict, you build up a tolerance. You need more of the drug to stay high. The U.S. economy needs more of this drug to maintain this high. Now, obviously, drugs are not what we need. We need to clean out the system. We need to stop the QE. The Fed needs to unwind its balance sheet, start selling treasuries and mortgages.
Yeah.
And, yes, we're going to go through a deep recession when that happens, but we're going to go through an even deeper recession by postponing it. Because eventually the market's going to force the Fed's hand, and it's not going to be able to take its foot off the gas. It's going to have to slam on the brake. But as I think interest rates start to rise, as the Fed tapers or talks about tapering, and bond yields back up, and mortgage rates go up, and prices keep rising for consumers for things like food and energy.
Right.
The economy is going to roll over, and the Fed's going to be right back to its old tricks. It's got nothing it can do but QE, and it's going to come back and do $100 billion a month or $125 billion a month. Who knows? It's a mistake, but the Fed's going to do it because the Fed always repeats its mistakes.
Well, since you've laid out that scenario, I can certainly understand why you've always been a very vocal fan of gold. What do you think's gold going to do from here, especially if we do get a taper tomorrow?
Well, it depends on the size of the taper. I mean, obviously, if it's big, gold might sell off. But I don't know if it'll stay down. If it's no taper at all, I think gold will rally. I think if it's just a small, trivial taper like the one I'm talking about, I think gold would rally on that too. I think gold has already discounted not only tapering, but actually the end of the QE program, which isn't going to happen. In fact, if you understand the fundamentals, you know that the Fed is going to do more, not less QE. And so that's all very bullish for gold.
Okay, but it is down 22% year to date. We've even got that fantastic chart up for our viewers right now. Gold price down 22% year to date. So I guess your gold view hasn't worked out terribly well this year. And in fact, Twitter has taken you to task. Let me read out to you exactly what Eladio says. Please ask Peter Schiff when he will finally throw in the towel and admit he was wrong by buying gold over the last 2 years. What do you say to that, Peter?
Well, I've been buying it for 12 years, so I don't know when I would have to throw in the towel. Gold's a lot higher than it was when I started buying it. I've never said that gold markets can't have corrections, that it's just a one-way ticket up. You're going to have corrections. I mean, you ask stock investors if they're going to throw in the towel on the stock market every time it goes down. I mean, you have plenty of 20-30% declines in the stock market. I would be more concerned about the decline we're having in the bond market. I mean, look at how much bond prices have dropped, and I think they got a much longer way to go. And I think the Fed is going to have to start printing a lot more money, unfortunately, to try to stop bond prices from falling, to artificially prop them up. But over the last year or two, gold has not been the best place to be. There have been other assets that have outperformed gold, and I've been in some of those assets. And I don't have 100% of my money in gold.
And in 12 months' time from now, where will gold be, higher or lower than where it is now, Peter?
Well, I think it's going to be higher, and I think it could be a lot higher, which is why I'm still buying it. The question is, when gold makes a new high, when are all the naysayers who have been doubting gold for 10, 12, 13 years, when are they going to throw in the towel and start to buy some? That's what I'm more concerned about. You have a lot more gold bears that haven't bought their first ounce. Eventually, they're going to capitulate, and they're going to come into the market.
Jeff, jump in here.
Peter, Jeff Kilbert from the floor of the CME Group here in Chicago. How are you today?
I'm
Hey,
good.
quick question. My point is that I agree. The Fed has artificially moved the equity market, SPOOs up, 20% year to date. But is your bullish case, which I am bullish gold as well, is your bullish case more about additional measures, more quantitative easing, or is it potentially that we could see equities retracing it and reclaims that safe haven trade? Because it honestly has lost that safe haven, title, but it has been a safe haven for thousands of years, Peter.
Well, I think it is going to be not only about more QE, but about the realization that the U.S. economy is not recovering. People have to appreciate the grave situation we're in, how much money is going to be printed in the United States, how much larger our deficits are going to go, and the fact that we can't pay back any of the money we've already borrowed, let alone the money we're going to borrow. When we have a loss of confidence in the dollar and in the U.S. Treasury market, and we have a currency crisis and a sovereign debt crisis, that's when gold is going to shine the brightest. And that's what I've been preparing for. I know that crisis is coming, and I want to